Coming up today, stocks rip across the board in the face of higher inflation, peak bearish readings, Hims and Hers rips 27%, Coinbase surges, and GameStop considers getting into crypto. The juices are flowing today, guys. Let's get it. And welcome back to Click Capital, your go-to for real market insights and actual trades, not just empty predictions. I'm one of the only YouTubers who shares a fully transparent track record with my members. And in these videos, I show you exactly what I'm trading daily. So if you want real market analysis and no BS, hit that subscribe button and let's get into it. And wow, what a bullish day. It's quite the green blanket we've got going on here, pretty much across the board. S&P 500 now within an inch of all-time highs. And like I said, I see a green, except for some industrials. We heard from Trump today, who said Pentagon spending could be cut in half. So we saw some defense contractors pull back. But other than that, another growth-led risk-on move, led by tech shares today. There's a triple Qs. All-time high at 539, currently just sitting around 536, just a couple of points from all-time highs. But actually just looking at the NASDAQ equal-weighted index, gives all 100 stocks in the NASDAQ index an equal weight instead of market cap weighted. That actually just broke out to a brand new all-time high. So market breadth and technology stocks is really good here, even though plenty other sectors and parts of the market are still well off highs. In fact, we've got the Russell 2000 still about 7.7% below all-time highs. So small caps still have a bit of work to do, but underneath the hood, things are just absolutely on fire. In fact, our members stock picks account today just had its biggest day ever, finishing up almost 4% just today alone. We're currently up 14% in time weighted return year to date, with portfolios sitting at all-time highs, and that's with no leverage and a diversified portfolio of 27 stocks. And I'll show you some of the stocks driving gains for members today later on in this video. And stick with me because in addition to sharing with you what stocks I'm in, I'll also show you right inside one of my trading accounts a hedge trade I placed today to help insulate my portfolio from any potential falls in high growth stocks going forward. It's a unique strategy and I think you'll find that really interesting. And also later on in this video, I'll share with you a common trap many traders fall into when following some YouTubers, along with showing you one popular financial YouTuber who regularly does it. I'll show you proof of that, so stick around for that as well. And before we dive back into the charts, let's just talk about the headline for today and how good the stock market's performed in the face of producer price index, PPI inflation, actually coming in higher than expected. However, why the stock market got excited, because looking underneath the hood of this report, and for those of you who don't know, producer price index measures the change in prices that businesses pay for goods and services before they reach consumers. It's essentially inflation at the wholesale level and tells us how much prices are rising or falling for manufacturers, suppliers, and producers, whereas CPI tracks prices paid by consumers. And so like I said, even though we're getting some contradicting headlines out there today, some saying it's better than expected, some saying still shows inflation is hot. The headline for January did rise 0.4% month over month. That was more than what economists were expecting, 0.3%. While core PPI, excluding food and energy, was in line. However, what's got the market excited is key PPI components that feed into the Fed's preferred inflation measure, the personal consumption expenditure, PCE, were actually quite tame, such as healthcare, airfares, and a few other things. And so these benign subcomponents have probably got the market forecasting that PCE, due out on the 28th, 2 weeks from today, might actually come in line even better than expected. As currently the street's looking for about 0.34% month over month headline, 0.28 core, annualized 2.6. And like I said, just looking at PPI today, coming in there at 0.4. Again, showing inflation is basing, but not breaking out. Just tracking sideways here like we're seeing on a lot of measures. Still well off those highs in 21, 22. And this is the one the Fed really pays attention to, PCE. Like I said, the street's expecting around 25 basis points. We'll see whether we come closer to 20 or 30, but we really don't want to see a 0.4, which at this stage doesn't look likely because just looking at real-time prices in the economy, they've actually been sharply contracting just these last couple of weeks. And so the government reported figures should be well indeed lagging behind this data, which is actually looking really good. Now keep in mind, inflation can swing around quite a lot. It's like volatility. But for the here and now, just like the market, I'm not really sounding the alarm bells. It's just on watch. And markets don't lie. Pretty much reversed all those gains in bond yields from yesterday on that slightly hotter than expected CPI. 10-year doing a bit of a U-turn today, actually taking out yesterday's lows, 453, helping to soften the dollar as well, pushing down against monthly lows. But I think this report does nothing really for the Fed. Kind of keeps them pigeonholed in wait and see mode. As like I said, I really think Jay Powell honestly doesn't know which way he's going to go next. He's kind of just swing trading the data. But it's interesting, we got the S&P 500 within 1% of hitting a brand new all-time high. At the same time, investor sentiment is at a one-year bearish high. We just got the latest AAPL investor sentiment survey, 47.3%. So this could be setting up the perfect storm for the bears, who constantly question this bull market. At the end of the day, this is the chart that they are short, earnings per share of the market, absolutely ripping higher. And as we can see back in history, typically before we get a recession, as shown here in the shaded gray areas, earnings per share will often start rolling over before going into that. Right now, what analysts are expecting companies to make going forward is at an all-time high, thanks to the boom in AI. And this is one stat that the bears are not going to like. Valentine's Day tomorrow, 14th of Feb. Don't forget to get your missus a Prezi, guys. But us bulls have already got a Prezi, with S&P 500 positive year to date and up more than 3%. Looking back in history, we've had a few instances of that. And there's only two recorded years, 87 and 2011, where that's happened before and the market finished down for the rest of the year. 93% hit rate versus a normal hit rate of 73% for an average year in the market. So how the market does trade at the early of the year can give indications of how investors, or those actually investing in the market, big institutions, are feeling, and that there's some momentum. Of course, anything can happen, but it's easy to see why the bears are full of fear. Still plenty of headline risk, tariffs. Trump's not done slapping tariffs on many countries around the world, trying to even the playing field. Not to mention all the controversy surrounding Elon Musk, heading up Doge, trying to clean up wasteful government spending. And now he's openly calling for investigations into some of these lifelong politicians, which I kind of find mind-blowing as well, on these salaries of 200 grand or so. Yet they somehow seem to amass tens of millions of dollars in personal net worth, or trying to appear like they're sticking up for the little guy, when really they're just 1%ers themselves. Elon Musk is coming for them. But anyway, that's all a distraction. I agree with Dan Ives. The worry this street around Tesla's Musk dedicating so much time to Doge takes away from Tesla and causes brand deterioration. Pretty much the exact same story as 2 years ago when he overtook Twitter. We believe Bark way worse than Byte in terms of brand issues and balancing time. Our focus remains on the autonomous future, 550 price target, agreed 100%. These short-term headlines are just noise. So many people get caught up in it. That's what we call recency bias. Got to kind of just step back and focus on the big picture here. And that is Tesla is at the cusp of possibly the biggest revolution of our lifetimes. Robotics, AI, automation. They've got a big in with China. And sure, there's some short-term issues. Soft sales in Europe. The rejigging of regulations, tax credits, that actually benefits Tesla more than their competitors. Cheap EVs coming out of China. It's never going to be perfect. If you wait for everything to look perfect before you buy, it's more likely a short-term top. You got to buy when all the short-term traders are sounding off about it, or when there's blood on the streets. Remember, it's always darkest before dawn. And so I'm not calling a low here on Tesla. We definitely could come down and test 310 again, but we did get a little oversold the last couple of days. And like I had suggested, it may have been a good area for some bulls to buy the dip, or new investors to initiate a position. We've still got fears lurking around DeepSeek, ChatGPT, clone coming out of China. Apparently doesn't need as many GPUs. How's that going to affect the AI infrastructure play? With the leading picks and shovels provider, NVDA, get their earnings next week. Could be a big one. Still haven't fully filled in that gap from the DeepSeek sell-off. We need to go up to about 142, currently 135, as you can see from my seasonality forecast indicator. Looks pretty good over the next couple of weeks, next couple of months, suggesting that any dips may present opportunities. And if you want to get this indicator for free, click the link below this video and you'll get seasonality forecasts for every asset around the world inside TradingView. But underneath the hood of semiconductors, we've had such a swift rotation, bit of the old guard coming back. Intel stock's on a hot streak. Like I said, when the street flips its narrative, it can do so swiftly. As it looks like bearish sentiment reached a peak, now the street's starting to wake up. This could set up for a great turnaround story. Beaten down under 100 billion market cap, with NVIDIA literally more than 30 times bigger. But Intel's not going anywhere. They're actually, in my opinion, a very important national strategic asset to the States in their quest to reshore chip production and protect the security around probably society's most mission critical product. Chips pretty much run everything these days. And just look at that move. Wow. My momentum thrust indicator firing off here today. Big volume pushing up. So it's very likely we may have seen the lows for this year. Who knows? Potentially generational lows, as it had been beaten down for years and years. As I told you guys a day after earnings, I wrote a 20 put. I was likely to be put the stock in my account last Friday night on the 7th, and I'm still long. So I'm long from $20 a share, plus the put premium I wrote, and this thing is looking pretty good. Next up, we'll be looking for a breakout above 26, but we very well may come up and take a pause, a breather, consolidation, or pullback, kind of let this market catch its breath. AMD still got a little bit more work to do though. It was pretty good price action there today. High highs, high lows, and we did break out from that gap down after earnings. So even though it's a little bit of a red spinning doji here, that's still overall a bullish move there. But again, this could play out over a few weeks. We may have to form a pretty decent base instead of just going into that really easy V-shaped recovery. Also good to see Rentec, often quoted as the most successful hedge fund of all time, headed up by the late and great Jim Simmons. They added Robinhood, Alibaba, Nike, Intel, Hims & Hers Health, Rocket Lab, Archer Aviation, and some Brazilian stock exposure as well to their portfolio. We just got their latest 13F. They also significantly reduced their position in Palantir, stock I'll get into later as well. So again, it's good to see some of the biggest and best investors and hedge funds in the world coming into Chinese stocks, coming into Intel, and another one I've been bullish on lately, Brazil as well, and that's the stock Rentec got into. But just looking at the Brazilian ETF, could still be in a bottoming process here, as it too has been beaten down for a little while. But what's driving all the massive gains for my Stock Picks members today? Hims and Hers Health. Absolute smoke show. They did a Super Bowl ad, which is already delivering a really good ROI for the company and us shareholders. The company's ad ranked 5th amongst all Super Bowl ads on how well it pushed consumers to seek more information about a brand. Another survey ranked their ads as second most appealing, and well done. And so for those who don't know, Hims and Hers is a telehealth platform. They offer lots of different products. Speak to a doctor over the video, then they'll send you drugs out in the mail. And so this is another secular trend of how people access medical care. And I first gave it out to StockPicks members and invested in it myself the day after, back in August, whilst it was trading in the 15s. Again, I saw earnings came in really good. They smashed numbers, but the market still negatively reacted. We took advantage of that dip, got into the stock. Then we had another scare back here. Some of you guys will remember. Headlines, Amazon get into telehealth. Actually proved to be another buy the dip opportunity. It's continued to rip, and like a bull out the gate this year, up another 27% today on a momentum thrust. Huge volume, 42 million shares, and I'm now up over 250%. It's first buying the stock. And since my stock pick strategy dollar cost averages, not only am buying a new stock every Monday, but anytime I sell a stock, the cash gets reinvested into all open positions. And since I hold winners a lot longer than losers, that allows us to compound these monster trades. And so like I said, if you want to jump on board, I've still got available spots. If you want to get all my stock picks before I invest in them, click the link below this video and head on over to clickcapital.io and jump on board today. Also catching a bid today, robotics stocks. Could be waking up here. Got Rich Tech still just hovering below its 50-day. And one stock I kind of consider one of the leaders in small caps, robotics, serve robotics, last mile delivery. Got investments from NVDA and Uber pushing up on this resistance zone, $23 a share. We got earnings from them in 2 weeks. Also got battery stocks trading up today, some space stocks catching a bid. AI is still super hot. A lot of these smaller stocks. That one I mentioned to you guys yesterday, Cloud Structure, massive buy the dip, absolutely ripped here today. Closed yesterday at 17. At one point today, I was up at 52. AI Healthcare as well. Grail, that stock I first mentioned to you guys back on the 22nd on my first video this year. I said, watch this one. It's looking like primed to break out. And I think a theme this year would be AI infused healthcare. And wow, look at that move. 34% today. AI agents, data analytics, quantum computing, still a little soft. 3D printing as well, consolidating, along with drones, kind of pulling back. What was interesting was Bitcoin didn't really participate in this risk on move today. Same with Ethereum, still a little soft here. Even though we just got Coinbase earnings. And just like Robinhood, smashing it out of the park. Revenue surging more than 130%. A lot of people trading cryptos. This is great for Coinbase. They charge really rich spreads and fees. Great business if you're a broker or exchange. Not so much for crypto traders though, as most of them lose money, as they're all pretty much just gambling on what the price is going to be tomorrow. But nonetheless, if you're on the other side of that and a shareholder in the state's biggest exchange, Coinbase, you're a happy chappy today, up 8.4%, just like Robinhood, blowout numbers after we saw them blow past expectations last night as well. Made over $1 billion in revenue for the last quarter, first time ever. Stock at all-time high, $63 a share, just going out to a monthly chart. There's that IPO, went straight into the meme traders' lap. They took advantage of it, did a secondary, stock got created, classic rounded base. Quite often see that after an IPO. Initial excitement, it wears off, insiders cash in, the bears run out of steam, it bases out, breaks out. Look at these big volume thrusts. Kind of starting to look like Palantir here, actually. And speaking of Palantir, that brings me to my hedge trade today. Now, admittedly, I did sell out of Palantir too early. I was long the stock last year, got in the low 20s, ended up selling it at 67 a share. For sure, I left a few chips on the table. However, that's okay. That's trading. You'll never buy the bottom tick, sell the top tick. You just want to take out the meat from in between. But anyway, this is a trade I've kind of been eyeing off the last couple of days. My reversal signal's kind of firing off here. Not only on the daily, but also on the monthly. Not hard to say this thing's a little stretched. 50-month VWAP, $52 a share. Here we are, 117. That's more than double. And in addition to its stock price, what else is also off the charts is its valuation. Now, just scanning the market for liquid stocks above $10 a share. That traded more than $10 million worth of shares today. Above 10 billion market cap. There's 877 stocks that meet these three criteria. Then I rank them all by price to sales. Now, apart from MicroStrategy, which I wouldn't even really call a stock anymore, pretty much a pseudo Bitcoin fund with exorbitant fees, thanks to management who continually pillage the company with exorbitant pay, stock-based compensation, selling the stock. But anyway, apart from MicroStrategy, which like I said, I don't consider a real stock, Palantir price to sales 100 here. A lot of people crying about Tesla trading on a forward PE around 100. That's 100 times expected earnings next year. Palantir's trading at 100 times sales. So imagine you got a restaurant, does $1 million a year in sales. If that restaurant were Palantir, the current price tag on it in the market would be $100 million. In other words, this thing has to pretty much grow at 30 to 40%, almost into infinity, at least another 10, 15 years just to fit into this valuation. So even if it did that in 10 years, the price could still be $117. But anyway, this is obviously going off the charts. I'm seeing super bullish sentiment all over the place now. Some people literally saying why valuation doesn't matter for Palantir. And don't get me wrong, it is definitely an exceptional company, a leader in AI. The revenues will grow for many more years. However, my trade today on this is, like I said, a hedge. And so I normally wouldn't try and go against such strong momentum. In fact, I haven't shorted a stock since March last year, and I don't plan on shorting any stocks anytime soon. However, the hedge I took on this was a custom trade I designed in the options market today. Now, I know options can get a little technical for plenty of you guys out there, so feel free to skip forward in this video if you're not into options. Otherwise, even if you're not, you still might find this interesting and you can follow my trade along with this, see how it goes. Okay, so here we are inside one of my trading accounts where I'm a bit more active and aggressive than I am with my other portfolios. Like I said, I have a high tolerance to volatility. And so I set up a trade today in the Palantir April expiry. And here's a look at my fill. And I'll go over this trade with you so you can understand my logic behind it. So what I did is I sold the 115 call. We can see that up here, -1, 115 call. I purchased the 115 put. So that's pretty much a synthetic short if I just had those two trades. When you're short the at the money call and long at the money put, that's pretty much the same as being short the stock, and hence why it's called a synthetic short. But for protection, I purchased 150 call. We can see that there, +1, 150 call. And so there's not really a name for this kind of trade when you think of things like straddles, strangles, iron condors, butterflies, vertical spreads, so on. You could kind of think of it as a synthetic short with a hedge, being that 150 call protects me on the upside. Now, just using the free website, optionsprofitcalculator.com, and I punched in all my fills for a custom 3-leg trade. You can see here, I wrote the 115 calls for a credit of 13.20. I bought the 150 calls for a debit of 3.26. And I bought the 115 puts for 9.98. The cost of that spread was 4 cents. With 100 shares equaling one option contract, that means my cost to open the trade was $4. My maximum risk is the same as the margin my broker requires, 3,500. And that's if the stock is above 150 at expiry and I still hold the spread. Remember, I own the 150 calls, so I'm protected above 150. If it does want to go absolutely diabolical, I've hedged myself, and that's what's different from shorting the common stock. Because if I shorted 100 shares of common, I'd be in for the same margin, but if it went diabolical and some crazy gap up, I wouldn't be protected. But because I own the 150 calls, I'm protected. And so this is how the profit or loss will look like on this trade from today going forward. So like I said, if it's above 150 at expiry and I still hold this trade, that'll be a loss of 3,500. However, because I'm long the 115 put, like I said, it's a synthetic short. If it wants to have a significant correction over the next couple of months, I'm not saying it definitely will. This is why it's called a hedge, because I believe Palantir, the most overvalued stock in the market, it's kind of representative of this real risk on sentiment we've got going on in the market, animal spirits. And like I said, everybody online now is super bullish Palantir. You can see it through my social media feeds. It wasn't like that back when I was buying it in the low 20s last year. And since I've got some good gains in some other growth stocks, this is kind of a way to lock it in. Because if Palantir does rip up to 150 over the next couple of months, I'm probably making a lot more on other high growth stocks that I'm long. But if the market for high growth stocks takes a turn, and we got a couple of big red candles here, and remember the low for this year is $63 a share. So even if we just come back and took out last month's low, would be at $60 a share. Sometimes you see this even in great companies. They get so carried away by the market, they can often have really sharp and nasty corrections. Again, I'm not saying that's definitely going to happen. I'm just saying if it does, probably most of these other stocks will be having a sharp pullback as well, unless it's something specific to Palantir. But it very well could continue running, and I will manage the trade as it evolves. But if we were to have a sizable correction over the next couple of months, my upside is greater than my downside, and that's just down to $60 a share. If it were to go to $40 a share, again, my profit accelerates as well. So like I said, this trade setup is pretty much a synthetic short with a hedge for the same margin as being short the common. And you might just say, oh, Jared, why don't you just buy a put, 115? Well, if I just put the 115 put for $10 a contract, my break even would be 105. However, doing this spread pretty much leaves me at break even if the stock's still the same at expiry. We can see it here, 114.96, which is just a couple of points below where we're trading now, just off a little bit after hours. I put this trade on right before close. Like I said, it was a 4-cent debit, $4 debit, because the credit I used from the short call, I used to buy that protective call and the at the money put. So anyway, that's my hedge on Palantir. It's not normally a trade I do too often, but like I said, I just saw the opportunity here. I'll see how it goes. Like I said, I'm not calling for a top. It's likely to keep running. Wouldn't be surprised if we go into 120s, get another good move up, and who knows, knows, I may add to the position because, like I said, I'm not just naked shorting a stock. I never do that, especially on something as crazy as this. You don't want to be naked short, wake up one day and it's up 20 or 30%. Sometimes it can go into a really ballistic short squeeze as well. I also may roll out the dates if we're kind of just bumping around because, like I said, I think it'll inevitably have a sizable correction, maybe in tandem with growth stocks at some point this year. I think that's likely. Doesn't mean the whole AI trade's over. Doesn't mean the AI bull's over. Just means Palantir is coming back down to earth and may consolidate. But if we did get those big red candles, that's when I would look to cash out the trade. And for me to make about the same as what I'm risking, 3,500 US, it'd need to come down to the low 80s, as we can see in the profit loss chart here, how the spread will evolve through time and price. As always, this is not financial advice. Please do your own research and know what you're doing, especially when it comes to options. Moving on today, we just got news hitting the wires. And I've said this for a while, what GameStop should do. Seems like an easy trade to me. Get into crypto. It's going to get things pumping up. You're the number one meme stock. Why wouldn't you? Should already be dialing up the corporate treasury with crypto. GameStop is exploring investments in alternative asset classes, including crypto and Bitcoin in particular. And like I said, it would get the stock excited. Got a pretty sizable rip right off the news. Up over 16%, still holding on to 7% gains post-market. Just looking at the daily, doesn't get the same attention as it once did. Still plenty of traders over on Reddit are loving it. Market cap 11.7 billion. Recent earnings actually came in with a beat, positive EPS, 6 cents per share. So for sure, animal spirits are running hot in this market. But like I said, that can go on for years. And stick with me because soon I'll show you one financial YouTuber who, in my opinion, is doing something very dodgy that I'll show you proof of. But first, let's just look at the action in some key markets today. Oil did sell off before the dip was bought, and it has been weak ever since news hit the wires of Trump and Putin about to begin peace talks in Ukraine. So geopolitical tensions getting dialed down. That's a good thing. And like I said, we also saw defense stocks drop today. As Trump said, Pentagon spending could be halved. With him quoted as saying, at some point when things settle down, I'm going to meet with China and I'm going to meet with Russia, in particular those two, and I'm going to say there's no reason for us to be spending almost $1 trillion on the military. And I'm going to say we can spend this on other things. Now, of course, it's really important the US keep the most powerful military in the world for the West's stability and security. But like he said, there is room for cuts. And wouldn't it be amazing if America's $2+ trillion annual budget deficit disappears over the next couple of years? That's going to have big ramifications on many markets, including treasuries. We'll also get a look at retail sales tomorrow, see how the consumer's been tracking. Holiday period came in pretty good. December, records with online spending, really good year-over-year growth. Price of gas has been low, but we do have some other things like eggs moving up. But looking at economists' expectations, they expect month over month to contract 0.1%, while still tracking year-over-year at 3.7, which is still a bit better than inflation. So we'll be paying attention to that tomorrow, along with any knock-on effects to retail stocks. They did bump up a little bit there today with the market, but still remain under pressure as a lot of them import stuff from overseas, still on the firing line with tariffs. Okay, just moving on, and a bit of a follow-up to yesterday's news. A popular financial YouTuber, Meet Kevin, closing down his ETF. As a reminder, that was an actively managed ETF, meaning Kevin himself was instructing the fund manager on what trades to make. He did place bets on Apple and Tesla, but after a September interest rate cut, Kevin bet on falling interest rates, with him getting into the 3 times leveraged 20+ year treasury bull shares, actually replacing tech companies as the PP ETF's top holdings, with nearly 16% allocations. And as we all know, interest rates shot up soon as the Fed cut. And this is the fund TMF, the 3x leveraged 20-year, which in my opinion is pretty much just a gambling vehicle, these leveraged ETFs. Anyway, he got in around here, got absolutely created, and that's what contributed to his ETF's significant underperformance from the market in that time, having to close down the fund, significantly underperforming the S&P 500 when it's all said and done. With him claiming that he took on too much, and now he just wants to focus on his YouTube and his courses and other things that are making him good money. But anyway, that's Meet Kevin. In today's video, we're going to take a look at another popular financial YouTuber, Zip Trader, run by Charlie Plattis. Very popular, 684,000 subscribers. A lot of his videos get over 100,000 views, sometimes even more. And I'm sure a lot of you guys may watch this guy as well. Even though I'm not subscribed, he regularly shows up on my feed, as the YouTube algo knows I'm into finance. So I'm sure he does on a lot of people's feeds. And just looking at some of his most recent videos, by now, this one stock will make you rich in 2025. $75 into these 4 stocks will surpass your full-time job. I can see how that's appealing to a lot of traders, especially those new to this world, maybe young guys, other people that may be vulnerable. And he too offers options alerts. Although as usual, I can't see a transparent track record anywhere of trades he's taken. And so like I said, his videos came up in my feed even though I'm not subscribed to him. And so I saw this guy, almost 700,000 subscribers, really highly viewed videos. I thought, wow, he must be really good. Let's take a little look. Then watching his videos, I could see him pumping these absolutely dog crap stocks. I thought, wow, that's interesting. I wonder if he's getting paid to promote some of these stocks that he features in his daily videos. And since I used to work for a large investment bank, I've been trained in compliance, anti-money laundering, also been trained in how to detect if somebody's lying. And one thing from my training that I know is anytime somebody promotes a stock, if they're being paid by the company to promote a stock, they legally have to disclose that, and they also have to disclose specific amounts they may have received to feature a stock in their content, otherwise promoting it. So I went to Charlie's website, Zip Trader. Here's the homepage, insider access for outsiders. Our mission is to provide you with top tier research that traditionally has only been reserved for Wall Street, Congress, and fat cat insiders. Wow, that sounds pretty good, doesn't it? Get on the inside with Charlie. But anyway, like I said, if he is being paid by companies, he's legally required to disclose that. So I had a little sniff around on his site, and buried down the bottom in the far right-hand corner is disclaimers. And when we click on that, it goes to a pretty standard disclaimer page. Quite a bunch of text here that pretty much every website has. However, if you scroll down, and you have to scroll down quite a bit, you keep going, scroll down through all this text. Wow, look at this. Compensation. Zip Trader has been compensated $19,500 to distribute media via email and SMS for Citicis Pharmaceuticals. And this goes on and on. 20,000, 25,000, literally pages of compensation disclosures. Some of them quite large, buried in there as well. Compensated 50,000 NTRB, 40,000 TRNR. Zip Trader has been compensated 57,000 SYTA. And here's a look at that stock, SYTA, which we can see here. He was, as they call it, quote, distribute media from August 15 to August 16, 2024. There it is on there, August 15, August 16, 2024, SYTA. Look what happened to the stock afterwards, absolutely cratered. And like I said, it's got a market cap 3.5 million. And not only these little dog crap nano cats, but also over-the-counter crap as well, which if I scroll through these pages and pages of compensation disclosures, we can get down to some of the over-counter stocks. Here's one here. Zip Trader's been compensated 38,000 for grid battery metals. There's the ticker on September 11 to September 12, 2024. There it is, September 11, September 12. Pretty much the high, then the stock cratered. And these are just a couple of select examples that I'm just looking right here now as I make this video. Like I said, I've just scratched the surface on this, but it appears all these amounts, and I don't have the time to add it up. I've got better things to do. Looks like it could be $1 million or even possibly over $1 million just in the last 2 years in required disclosures. I've been paid by media companies for so-called media distribution, advertising, which in my opinion is pretty much just pump and dump schemes. Because like I said, in my experience, what I've learned how these things work is these small little companies, some of them just exist purely for pump and dump schemes. As insiders, their cousins, uncles, neighbors, whatever, they all load up on the stock, then they go out to YouTubers like this, pay them exorbitant amounts. And you got to ask yourself, why are they paying them so much? What exactly are they buying? And what you'll find a lot of the time is they've already previously bought the stock. And like I said, their friends' accounts, they pump it up online and then they dump it, they offload. So is Charlie selling out his audience? Is he using his very sizable audience as exit liquidity? Well, he's taking in these huge payments. In my opinion, this should be illegal. Kind of mind blowing that it's not. But anyway, I just want to make you guys aware of what can happen out there. And this is not just Charlie. He's not the only one doing this. He's just one financial YouTuber engaged in such tactics. And like I said, this is just me scratching the surface. It's unfortunate, but pretty much our entire industry is full of this kind of stuff. And I want to make it clear, because I invest in small caps myself, nothing this small though, that I've never been paid to promote a stock. I never have, I never will. And the few times I've actually been offered to do so, I've happily given the promoter a piece of my mind and that I won't ever sell out my audience with a pump and dump scheme. So long story short, I know you guys watch many YouTubers, and I'm not saying just watch Click Capital, all the rest are crap. There are some really good, talented guys out there, especially in niche industries. For example, let's say I'm researching a shipping stock. Quite often I find the best content on Seeking Alpha, and what makes them different is not anyone can post over there. They only allow verified analysts and professionals to post articles, and they actually pay them to write articles. So I find the best content on Seeking Alpha. I also use tip ranks. I'll go straight to the company's investor relations section on their website. I can upload SEC forms into ChatGPT, so on and so forth, but also as part of my research process, I'll look up industry analysts and specialists or people that are really into a certain industry on YouTube. And there is plenty of great guys out there. I watch YouTube every day myself. So I just want to make it clear, I'm not saying every other financial YouTuber is a scammer. I don't have any personal vendetta with Charlie. My goal of doing this is just to make you guys aware, because I know from hearing from some of you guys in my emails, some of you guys are new to the industry or you're a young guy guys, and all this stuff's kind of new to you, and you can easily be swayed in certain ways, but you may not know what's really going on behind the scenes. Because the videos I watch of this guy, he doesn't disclose these payments in the video. He may just say this sponsored segment, which I think a lot of people wouldn't even really understand what's going on. I don't think they know when he's talking about a particular stock, he's been compensated $27,000 to, like I said, quote, distribute media via YouTube. Yeah, right. So it's kind of mind-blowing. Someone with almost 700,000 subscribers, really popular videos, and here's me thinking, wow, he must be really good. But when I heard him talk about some dog crap stocks and took a little look what I uncovered. So like I said, you don't have to join any of my services. You can watch my videos every day and never click the like button. I'm still happy to help you out, but if you are going to join someone else's service, make sure they got a track record or check their disclaimers page on their website to make sure they're not being actually paid by all these little companies to mention them to you. And if they are, in my opinion, you should run the other way. And like I said, these kind of tactics, not just being paid to promote these little stocks, but plenty of other bait and switch tactics are used by some of the largest financial YouTubers out there. So be very careful, as I don't want them to deceive you either. And on that sobering note, that's pretty much a wrap for today, guys. S&P 500, look at that, pushing up here on highs. As I'd been noting of late, volatility may have been giving us the tell, pretty subdued considering everything that's going on. Nice little pullback in bond yields again. They may just consolidate around here. Next PCE is going to be a big one. Market's nervous about inflation. But the real standout was the NASDAQ equal weighted index breaking out to brand new all-time highs today. That's a pretty bullish signal, guys. Thanks very much for sticking with Click Capital. And as always, take care. Cheers.